Iran's national currency, the rial, has fallen to an unprecedented low against the U.S. dollar, compounding deepening economic hardships and widespread social unrest across the country. According to currency tracking websites, the free market exchange rate for one U.S. dollar reached around 1,500,000 rials, the weakest level in the history of Iran's modern currency markets. The rial has lost roughly 5% of its value in January alone, a dramatic drop that has further squeezed Iranian households already struggling with soaring prices and reduced purchasing power. Inflation continues to surge, with year-on-year consumer price growth at about 60% for the period ending January 19th, according to official statistical center figures. The plunge in the rial has pushed the price of foreign currencies higher in Tehran's markets, with traders offering rates near record peaks. While the government claims recent policy adjustments will stabilize the situation, many economists warn that confidence remains fragile. The latest political and economic instability traces back to late December, when sharp depreciation of the rial triggered protests in Tehran's historic Grand Bazaar. Those demonstrations quickly spread nationwide, morphing into broader unrest that challenged the economic legitimacy of the government. In response to rising public pressure, the government introduced a controversial subsidy reform that eliminated preferential foreign exchange rates for importers. Instead, Tehran shifted toward direct cash transfers aimed at supporting household purchasing power for basic goods. Officials argue this will eventually help stabilize the exchange rate, though critics say it has yet to temper inflation. The depreciation of the rial has fueled sharp price increases across a wide range of goods and services, from food staples to imported goods. As households see their incomes eroded by inflation, economic grievances have become a central driver of social discontent. The currency slide also has implications beyond everyday consumer costs. Gold and other precious metals have also hit record prices in Iran's markets, reflecting broader concerns about wealth preservation amid currency instability. The unrest that began with economic grievances has taken on political overtones. While the government characterizes the protests as driven by foreign actors and agitators, many Iranians view the crisis as symptomatic of deeper structural issues, including chronic inflation, sanctions pressures, and weak economic governance. Internationally, some observers see the turmoil as further weakening the government's position, even as Tehran insists its policies are aimed at long-term stability. With inflation remaining high and the rial continuing its downward trajectory, Iran's economic challenges show no signs of quick resolution. Political trust has been eroded, and financial pressures on ordinary citizens continue to mount. Whether recent fiscal reforms will succeed in stabilizing currency markets and tamping down inflation remains uncertain. But for many Iranians, the effects of the rial's historic collapse are already being felt in daily life.